You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. So be sure to check out our live stream via the Mixlr app, or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. Learn more about QuickStrike at bantix.com. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. Visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, welcome. Welcome to the program. Welcome to TWIFO This Week in Futures Options. A fun one in store for you, a crazy one. Looks like a lot has changed since we started broadcasting earlier this morning in the markets. The worm has turned, and it's turned pretty nastily, and a lot of interesting stuff for us to break down. Narrative shifting a little bit on the fly here, which makes doing these live shows so fun, listeners. And joining me to help me hold down the fort. He hasn't been on in a while. I'm happy we got him back. Mr. Sean Smith, the MD of Derivatives Licensing over there in FTSE Russell land. Sean, welcome back to the program, sir. It has been too long.
Mark, it's been a while. I've been traveling Wilbury. So, yeah, it's great to be back. Thanks for having me.
Traveling Wilbury. I like that. A less heralded band. They had a few good tunes, though, as I recall. It was rumored you were going to be sitting next to me here in studio. What happened, sir?
I was, and then I just, this stuff just starts, the domino effect and the snowball effect of stuff going on here at the office just kept me anchored here to, it's like I think about a 7-block walk over to the studio, and I might have just made it, but I didn't want to miss the opening, so I opted to just dial in.
I guess I'll have to eat all these delicious steaks and gourmet burgers here by myself. Oh, terrible hardship you have put me through here today, sir. But yeah, a lot of
enjoy them.
Yes. So speaking, I don't get them when you're not here. So no fun, no delicious smells in the studio today. But we got an interesting one here today, Sean. I think I can understand why you're kind of glued to your desk today, because how the worm has turned. We had planned to kind of discuss one narrative coming into the show, and that seems to have turned on a dime. Shall I say a tweet, sir? Is that your take as well? A lot going on out there today.
It's incredible. Volatility, it seems to be a very good word.
Yeah, I think volatile is an apt description for the markets we're in. Well, we were coming into today on one kind of interesting narrative, which was, of course, everyone was waiting with bated breath yesterday for the FOMC decision. We've talked many times on this show about what the CME FedWatch tool was pricing in. Remember, it was about a 98% chance for 25 basis points, nothing for 50. Then Powell testified a few weeks ago. That changed quite a bit. All of a sudden, we saw about 25 to 30% probabilities for 50 basis points and about 75 for 25. That kind of mitigated a bit towards the end, but it got there still around 20 or so going into yesterday's announcement. Powell comes out, of course. They do the first historic event, the first rate cut in pretty much over a decade since the financial crisis, so that's a big deal. And yet, of course, it wasn't enough for the markets. Of course, his comments afterwards spooking people a little bit, including maybe one commander-in-chief. We'll get to that in a second. So, of course, he comes out and says, maybe the easing trajectory everyone was expecting down the road, maybe we're not going to do that as aggressively. Market gets spooked. We saw massive sell-offs, 1% pretty much across the board. Volatility, VIX and others spiking up to about 15.5 or so yesterday, which was pretty hard. And then, of course, today came in and it seemed like, all was rosy. All was right with the world again. Coming into the show earlier today, we saw volatility eroding across the board. VIX had come off quite a bit. It was down to about 1390 from the high about 1540. It was still up about 1.5 or so from our last show last week, but still off of its recent highs. The volatility of volatility, aka the VVIX, was also it was up only about 6 handles, about 91, nowhere near where it is right now. And the Russell Vol, aka the RVX, the Russell VIX, was at about 17.5. That was also up about a point and change from our last show, so up, but nowhere near what it is now. And then, and that spread had actually widened out. The VIX RVX spread had widened out by about half a point, and that seemed like that was what we were looking at today. Up 1% pretty much across the board, up 1.5% in the Nasdaq, and then apparently the White House did not like what it heard out of the Fed yesterday, and they decided to perhaps guarantee or ensure that we have a rate cut coming up in September, because during our last show, actually, the administration coming out saying they're going to put another 10% tariff on the remaining $300 billion worth of Chinese imports that have escaped the trade war so far, effectively ratcheting that up. And lo and behold, market's not liking that at all. So the massive gains we had seen up 1% or more in most of the indices, all of those were wiped away. Coming into showtime there, we were off pretty much 1% across the board there in most of the major markets. So not only have the 1 to 1.5% rallies wiped out, but now we're down 1%. That's pretty much the case right now as well. Most of the major indices off about 1% right now. So a massive 2 to 2.5 percentage point swing just in the span of about an hour or so here. So a lot going off. And a lot of people reading into the tea leaves thinking this was done as a way to maybe ensure that we get that cut in the next meeting. And speaking of the next meeting, let's look at the old FedWatch tool and see exactly what it was pricing in. Yesterday it was kind of a coin flip. They were pricing about a 50% chance of another 25 basis point cut. After today's events, we're looking at about a 70.5% probability out there right now. So that has jumped tremendously and not a long time at all. So folks looking into this and saying, hey, I think we're going to see a little bit of action out there. Sean, you've been traveling hither and yon, literally traveling the globe since the last time you and I sat down together here in the studio. So first off, catch us up on what's been lighting up your tape, and did you get a little bit of a chance to maybe relax and take a bit of a vacation after all the madness that was Russell Reconstitution, sir?
No, I have not rested my laurels at this point. We're still just going like gangbusters here, and I think there's just more eyes and more eyes on the Russell suite of products, that being the 1 and the 2. As you know, they're combined making the 3. But record volumes on Recon Day, which were pretty exciting. I don't know if you've spotted these statistics. You probably have, so apologize for re-bringing them up. But Nasdaq on the close in the last second traded 1.2 billion shares with a notional value of $41.8 billion. And our other partner, New York Stock Exchange, traded 1.42 billion shares, totaling $65.7 billion of traded notional. Combined, that's 2.67 billion shares trading in the last second and a quarter of trading on June 28th, totaling $107.5 billion in notional. So big trading day, big record day, very exciting. As you know, it's a very important day for our indexes to be reconstituted on the close there on June 28th. So just an exciting day. We were all in Times Square. Our pictures were up on the Nasdaq site overlooking Times Square. So it was a tremendous day, and Nasdaq did a tremendous job having us there, and my boss, Brian Rosenberg, to ring the closing bell and to say some fantastic words about our business and our partners, and just an exciting recon.
Well, since you're talking recon data, Sean, I see your bit of data, and I'm going to raise you some. Are you ready for this?
Go for it.
I got the mother load of data here. Our friends over there at CME really crunching the numbers and doing a lot of analysis on what the heck happened and what the whole thing was about and why we should pay attention. So strap in, listeners. We've got a bunch of data in store for you. You kind of mentioned some of the volume that was slinging hands. It is a mind-numbing amount of volume that changes hands in just a fraction of a second there. So that alone, I think, makes it worth paying attention to. By the way, the Russell, the 3,000, so the 1,000 and the 2,000 together, they combine for 98% of the investable U.S. equity market is somehow represented amongst that bubble of 3,000. Sean already hit on the kind of the values that were changed hands up there. Some interesting other numbers as well. The Russell 3,000, not one we talk about a lot. In fact, I think we have a listener question about that a little later, so maybe we'll table some of that. But the market cap out there for the Russell 3000, was a combined 1,000 and 2,000, hit an all-time high of nearly 32 trillion, 31.7 trillion. That was on a recon day. That's up 3%. From a year before. Some other interesting nuggets and trends they saw as they were crunching the data here. Russell 1000 gained 6.1% from last year's recon through May 10th. The Russell 2000, however, as we talked about before, hit some headwinds. It was a rough year for small caps. You know, the narrative going into it was that maybe they might fare well given the trade war is mostly macro, and yet they were off 5.5% year over year. So a challenging year for the small caps. The 1,000 market cap, $29.3 trillion versus $28.2 trillion a year ago. If you're wondering what sectors make up the biggest chunk of that, if you guess tech, you're probably in the right area of the market. Tech emerging as the biggest driver. 40% of those gains come in from tech last year. Also some big chunks from healthcare and consumer staples, but tech is clearly where the action was last year. The biggest 5 companies in the entire Russell 3000, not going to surprise you, it's the same names as it was last year. We've got Microsoft, number 1. I mentioned that before. Microsoft taking the top spot this year. They were number 4 last year. Number 2, Amazon, they stayed the same. Number 2 last year as well. Number 3, Apple, they were number 1 last year. Number 4, good old Google, aka Alphabet, they were number 4. They were number 3 last year. And Facebook, holding court at number 5. Let's break down the rest of the top 10. Berkshire Hathaway, number 6. They stayed the same as from last year. J&J, Johnson & Johnson, number 7. They were number 9 last year. Number 8, JP Morgan. They were number 7 last year. Visa coming in at number 9. Interesting. They weren't even in the top 10 last year. They were number 11. And ExxonMobil dropping down to number 10. They were number 8 last year. A lot of what's going on in the WTI world probably having something to do with that. So a lot of changes this year. Let's see here. The new entrant, like I mentioned, Visa, the only new entrant in the top 10. Also worth noting, a lot of the hot IPOs, everyone's all obsessed with. We were just talking on our option block program that the number 1 traded thing of Fidelity today is Beyond Meat. So these IPOs are hot right now. Uber, Lyft, Spotify, Beyond Meat, PagerDuty are some new entrants in the Russell 1000 there. And 27 other recent IPOs are also in the 2000. So a lot of IPOs, 37 IPOs reflected in that number as well. And the top, despite that, and the new IPOs, the aggregate market cap for Russell 2000, again, we said it was a rough year for small caps, down 4% to $2.4 trillion versus $2.5 trillion last year. Let's see, really quickly, Russell 3000 added 200 new companies. Of those, 115 graduated from the Russell Microcap. The Russell 4,000, I made a new index for you, Sean. Russell 1000 had 47 new companies entering it, 36 of which are migrating from the Russell 2000. We mentioned some of those before, Beyond Meat and Lyft and all that fun stuff. Let's see, 2019 Recon brought 189 new companies into the Russell 2000. 74 are from shifting up from the microcap, and they're coming from healthcare. Only 13 are technology, which is interesting. 9 are financial services. Interesting nuggets too. Some breakpoints of what delineates the 1,000 from the 2,000. And that comes down to market cap. And the market cap, let's see, a challenging 12 months for obviously Russell 2000. The latest recon, the breakpoint to go from the 1,000 to the 2,000 was from 3.6 billion down from 3.7 billion last year. So that line of demarcation there between the two actually fell this year again, which is a fact of the kind of tough waters that the Russell 2000 find themselves in. And the boundary to make it into the 2000 is, let's see, 152.3 million. That's down from about 4.5% from where it was 159.2 million this time last year. All right, Sean, that's did I overwhelm even you, sir, with some recon? Was that enough recon data, or do you need more, sir?
I'm trying to think of a good recon ism for you. That's recon magnum. That's like massive recon info. Interesting point about the performance of the Russell 2000 last year. Through the third quarter, they were outperforming the large caps. So it all that sell off at the end of the year is where the acceleration of the downside of the Russell 2000, making it a volatile product, as we all know. So that's why we talk about the VIX RVX spread every show, because it moves, and the Russell 2000 being, domestic stocks, tariff insulated type of plays, there's a lot of opportunity to trade. So the Russell 2000 is one of those fantastic products on the futures at CME and on the option side at CBOE. So just thought I'd bring that up.
Yeah, your roadshow seems to be paying dividends, and maybe some of this market activity obviously driving some paper as well. It's like a decent, since we're talking Russell, let's look at the numbers really quickly here on the Russell 2000 options here. Actually a decent week. Looks like coming at showtime here, we're at 1556, so off about 1.6% net on the week now. Again, a lot of that coming in that downside swing we saw today. And despite that, we're at 1565. Looks like the big print is actually pretty far out of the money. It's the 1,300 puts out there in September, doing a decent clip here. Look at thousands here going up. The big chunk going up on Wednesday, actually, and looks like it might be slightly closing, actually. So maybe someone giving up the ghost on Wednesday after yesterday's rally, then maybe taking a second thought on that today, wishing, man, I wish I kept those 1,300 puts on, because they're looking a little better right now than they were this time yesterday, at least. So far out of the money set puts kind of leading the action out here this week. Anything else coming across your radar, Sean, as you're traveling hither and yon? You're talking to the clients, you're hearing about the use cases and things that they're doing. Has this performance of small cap, has that put them off, Russell? Has it intrigued them because of the volatility? What are you hearing anecdotally out there as you're crisscrossing the globe, sir?
It's definitely intrigued the marketplace. People are watching and trading a lot more. The volumes at CBOE are getting stronger. Open interest is actually well over 600,000 contracts. So CBOE is their RUT product, RUT, is something to watch. And again, the gentleman to really speak on that, and we should have Rick Rosenthal on the show again, is Rick Rosenthal. But just to bring up that volumes are getting stronger and healthier, markets are getting healthier as well. On the CME side, volumes are exploding as they continue to distribute this product globally. They have all the regions around the world trading the product, and virtually 10 to 15% every day comes out of Europe. So it's amazing, and Asia is trading quite a big number of volume as well. So that global reach just continues to reach farther into new places, and CME continues to just grow the client base that trades the product, which is really exciting to see.
Yeah, I'm looking here right now, coming into, looks like this is the latest number is for June, And we saw a big spike, obviously, in ADV and open interest for the futures, the Russell 2000 futures, back in December. Go figure. It was madness. But I'll take December, that kind of outlier, out of the chart here. And you see actually where June was pretty much up there at the peaks, with March as another kind of the most active months in terms of, at least in terms of ADV and open interest. A pretty active time here. So there's definitely interest here in some of these esoteric sectors, which is fun. It shows you, Sean, why we can't prep for these shows too far in advance, because, man, the worm turns on a dime. And when it does, the narrative shifts completely, like it is today. We're still seeing that sell-off. Actually, it looks like it's mitigating a little bit now, not quite off the full 1% that we were at the start of the show, but still fascinating stuff out here in equities land today. We could keep talking equities for a while, Mr. Sean, but let's hit on some other products too. You're my guest. I'm going to give you pride of place. Where do you think we should hang our hats next? Should we head out to the land of energy? Should we go out to the metals? Should we hit some rates? What's floating your boat this week, sir?
If we're going to transition off equities, which I'm going to struggle doing, let's go energy. I know if Nick was here, he'd want to talk rates, but
yes.
I think energy is a good one to start with, and then we can probably head into interest rates.
Let's do it, sir. Let's head on over. By the way, listeners, you guys, as always, can play along with the home game, cmegroup.com/TWIFO, TWIFO. And if you did that, go on out to energy, then go out to crude oil, click on WTI, and you too can join the analysis party that is going on here on the show. An interesting week out here in crude oil. Kind of some interesting numbers hitting the tape. Of course, we saw crude rally a little bit yesterday, interestingly off the rates decision. But we saw weird numbers coming out as well this week. We saw come out of OPEC, so more probably on the international, on the Brent side than on the WTI side. But OPEC falling to its lowest production level since 2011. So those cuts they've been promising taking effect. They put out about 29.5 million barrels a day. That's a decline of about 280,000 barrels a day compared to June. And again, the lowest monthly level since 2011. On the flip side here, the domestic side, which is where we tend to focus more for WTI, we saw futures rallying a little bit yesterday and then kind of taking a little bit of a break here now. And looks like we're off about 2 handles net on the week, or about 2.25%, actually about almost 4% on the week, down to about 54. That's with government data coming in earlier this week from the EIA, reporting that crude supplies down yet again, down about 8.5 million barrels. That compares to the expected decline of about 3.9 million barrels. So these energy analysts are even worse than equity analysts when it comes to predicting these drawdowns. The American Petroleum Institute, they reported a 6 million barrel drop. This is the 7th consecutive decline to crude stocks. The next record is 10 weeks, which goes back to November 2017 to Jan of 2018. So we're not quite there yet. We're not quite at a 10-week stretch of declining inventories, but we're at a pretty long run here of downside surprises when it comes to inventories. And all that combining really to not really budge us to the upside. We talked about that before a lot. We had it just on the show last week with Adam, talked a lot about crude skew and how it really can't really seem to catch a bid, can't really seem to get some life anytime there's any upside action. The market makers, the customers are taking that opportunity to just crush the skew, to dump all the upside calls they can. And that seems to be the case again. This week, though, we're seeing vol getting a bit of a lift. All this downside, remember, we said the bid is to the puts, the offer is to the calls. And pretty much no matter where you're looking, even if we go out, let's see, most of the action this week was in that SEP contract, which does about almost 2 weeks to go, but let's go out to October. It's just to give it a little bit more time to bake. Otherwise, 2 weeks to go, that's mostly gamma. 2 months to go. Now we've got a little bit more action here. We're seeing the skew getting a little bit richer to the puts this week. Go figure, going down a little bit. People maybe starting to get a little bit more concerned structurally, seeing that come in. Seeing the calls also, interestingly enough, get a little bit less cheap, so a little bit bid up. They were nearly 8% cheap to the at-the-money. Again, this is out here in the October contract. This week, they're about 5.8%, so coming off about actually exactly 2%. So the call's getting a little bit more love. Maybe the fact that we're retracing, we are moving down that skew, so you're going to expect it to see it rotate a little bit. You expect the calls to get a little bit of a lift, but that's been an issue of late. The calls can't maintain this lift. We'll see if they can. Let's go out back to that crazy contract that's going away in a couple of weeks here to see what's going on with the skew out there. The puts getting more bid out there. They were 9.3% rich to the at the money. Now they're all 11.2, so almost 2 points richer. And the calls getting bid up there as well. They were 6.2% cheap to at the money. Now they're about 3% cheap to the at the money. So a lot of action out there. Let's see what the number one trade this week. We're at a 54 strike right now coming into showtime. It was a double puts here in the SEP contract. Double puts lighting it up nearly 17,000 times this week. The big day was actually today, 8,000. Go figure. Some of this warm turning lighting up the downside here in WTI. 5,000 yesterday. So obviously we don't have OI numbers for today's action, but half of that volume, almost 8,000 contracts going up today. So pretty active day to the downside on these double puts in WTI. The fact that we probably crossed through that strike, maybe causing some action there, maybe some adjustments, maybe some closing. But interesting paper out there. Number two are the 50 puts, 14, almost 15,000 of those again today. The big day, almost 11,000 of those coming today. The rest of the week, paltry volume compared to today. So today, a big day for downside action here in WTI. Let's scroll out a little bit farther as we are wont to do here and see if any weird paper coming across our strike. 70 calls, not to be forgotten. June 2020, 70 calls, lighting up the tape about 2,500 times this week. So not all puts, but mostly puts. And that's kind of it for the upside action there in terms of calls. Yeah, so the calls, they got a little bit firmer this week, listeners. All you out there who've been kind of waiting for that day. And we got the vol bid up a little bit too. I'll have to go back out to our buddy Mr. Rhodes over there in Tab Group and see what he thinks of this recent pop. He's doing a lot of research now into how crude vol can pop versus equity vol and how maybe it's a bit of an underrated product from a volatility perspective. This week's action, at least from a vol perspective, certainly seems to reinforce that going on here. Let's keep on rolling. Sean, it's interesting. We talk gold a lot here on the show. That's usually because Nick's on and he loves gold. But actually, the action this week in the metals is in silver. What do you think about talking some silver, Mr. Sean? How about that?
Sounds excellent. Let's do it.
So hopefully you're not in the werewolf family. This won't offend you, sir. We've talked a little silver. You okay with this? You're cool with this?
I'm good. I actually shaved today, so no facial hair, so we're good.
You're not going to howl at the moon at me during this segment here?
There'll be no howling at the moon.
Unless we go to that piano bar later. Then all bets are off there.
I play the piano. We could do that.
Do you really? Uh-oh. Now I see. Look, these little nuggets dropping during the show. Little nuggets of information that we could use against you at a future time. So we appreciate that, sir. But yeah, hot time here in the Silver City, at least. We were just talking about it on the option block. Tons of call activity in some silver miners that have earnings coming out this week. Also seeing the silver options here this week, the straight-up silver contract going gangbusters here. Just in July alone, we've seen 2 of the top 10 all-time highest trading days. This coming out this morning here from CME, including over 33,000 contracts. That was the big day traded on July 19th. So silver is where the action is right now in the metals. Silver options are clearly, I'm looking at this chart here, put out the silver options daily volumes tweeted out by CME today, and 33,000 is not even close. The next close, it looks like about 28,000, and then it kind of goes off from there. So we're at some rare territory right now in terms of daily volume here in Silverland. Coming into showtime, silver at about 16 1/3, off about 0.5%. Vol, kind of a weird mixed bag out here. It's like some of the front contracts that are mostly gamma, up slightly. You get a little bit farther out. You get out about a month or so to where this SEP contract is going out. Then it vol's coming off a little bit again, and it comes off for a little bit of the structure. Then you get farther out again. You get out into Jan, and next year you get out into 2020, and the vol is actually ticking up again. So you got this kind of weird, squirmy beast that is the vol term structure out there in silver right now, which is interesting, and again, not what we see in a lot of the other products like a gold and some others. Let's see what was lighting it up out here. OI up actually only 1%. Interesting. So OI, I think, given these records we're setting, maybe, of course, that reflects the pop from July as well. So maybe that July 19th trade gumming up the works here a little bit, because that was a big day. Maybe that's put the OI up a bit. But still, up 1% here this week. The biggest action coming with about 1/3 of the paper coming again in that SEP contract. And we're at about 16 1/3 or so right now out there in Silverland. It was actually, even though most of the action was in SEP, the biggest trade was not there. The biggest trade was in October. There was a bit of a tussle between October and D's, but it was by a nose. It was the October 18 calls, about 2,200 of those lighting it up, 1,500 come in today. So upside calls in silver are the order of the day today. We were talking about the stuff in pause, which is a minor, earlier today on the option block, talking about all the upside call activity going into their earnings, which are later this week. Someone was really excited, shall we say, about some upside out there. Now we're seeing similar upside activity, pretty aggressive, about almost two strikes away in this. We're looking here at the SEP the OCT contract here, doing 2,000 and about 2,200, which doesn't sound like a lot when you're talking euro dollars or equities, but when you're talking silver, that's a good clip. That's a lot of volume. And that was a good chunk of that was opening coming today, about 1,470 out there. Then the number 2 trade right behind it, so maybe a bit of a roll. We'll have to look, were the 19s in Indices. There were 2,114, 2,196 was the 18 calls in October. The 19 calls in Indices also getting some love, maybe rolling up and a bit out. Interesting. Also, a lot of paper today, 1,920. So of this 2,100 contracts, 1,923 came today of the 19 calls. 18 halves also doing 1,500 today. So maybe a bit of a roll there from the 18 halves up to the 19s in Indices. It'd be weird to keep it in the same month, but hey, we've seen weirder things out there. Also, the ratios don't really line up. So hard to believe it's not somewhat related paper, though, given how close those strikes are there. So 1,600 of the 18 halves also in D. So a lot of action up here in the call side in silver, listeners. We could probably keep going. I want to get on a couple of more products here before we roll on to all things. We didn't touch on before. Really quickly, Sean, we were talking before on equities. We forgot to mention just how much paper really quickly is going up in these micro E-minis. You know, earnings season, everybody loves earnings season. These micro E-minis are just on fire. They already have said they're the hottest new product launched in the history of CME. They traded nearly 1 million contracts. That's over 13.5 billion notional yesterday, July 31st. 919,000 contracts going up. Earnings season clearly driving tons of paper. We're seeing in different segments too. We're seeing the E-mini Nasdaq 100. They've done 10 million plus contracts since launch. The E-mini Dow, 2.5 million plus contracts since launch. The overall complex, the entire E-mini micro complex, has done 25 million plus contracts since launch. Remember, these are smaller contracts, but still, that is by any way you slice it, that is a mountain of volume. Now, Sean, we forgot to hit on the micro E-minis. What are your thoughts on the micro E-mini Russell and how they're faring and pretty much lighting it up these days, sir?
Well, they traded almost 100,000 contracts yesterday, so big numbers. And again, the breadth of where it's coming from is across every segment, and they're trading globally as well. So it's really exciting to see. But again, yeah, CME, congratulations. This is truly like the greatest product launch of all time, of which they've stated publicly. So it's just fantastic to see. You know, they respond to client demand extremely well, and these products were asked for, and CME brought them. So congratulations to them. This is just really exciting to see. You know, volumes are strong. Open interest is getting there as well. So these products are investment vehicles, not just trading vehicles. So it's pretty cool to see that the market is bringing them and keeping them as a product. It's really exciting to see.
I got more products up my sleeve, but I think the listeners got some product requests as well. So maybe I'll give them a chance to direct where the show goes as we keep on rolling into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to your segment. I mean, the whole show is your show, really, but this is the one you guys get to take control of and suggest products, ask questions, all that fun stuff. Got a bunch of questions about Russell here, too, Sean. Maybe we'll kick off with one of those. Let's see here. Enlent wants to know, we were just talking about this, about the old Russell 3000. He wants to know, or perhaps she, why aren't there options on the Russell 3000? So there you go, Sean. They want more. They want more. Not just the 1,000 is not enough, 2,000 is not enough. They want the 3,000. Why don't we have options on the 3,000, sir?
Phenomenal question. It's a great question. The Russell 3000 would be the. You gave the statistic earlier today, right? It was 98% of the market.
98. It would be the market.
It would be the market, right? So, the world likes to trade the market, but large caps are a specific area within the market, and small caps are another. And frankly, they like to invest in them. Combined, you can do that in futures. Combined, you can do that in options. But to put them all into one big index options product, I think the market would be a disservice to the market, because there is so much interest in both of these as separate products. But you can create that Russell 3000 yourself synthetically with futures and with options. I hope that answers the question for Enlent.
The good news is you can do that yourself. You're right. A little bit of effort, but not a ton. I'm curious. I'm trying to think, Sean. This is probably one of the first questions we've got along those lines of combining the two. And you're right. It would be a massive, unwieldy beast. It would be effectively saying, I want to buy all or sell all of the market. That's what you'd get with this. Maybe there is an audience for that. I don't know. You guys, you're out there talking to the institutional guys a lot and the market makers. Do they have any interest in this, or do you, like you said, it's just too much of an unwieldy beast?
Yeah, I think it's just too much of the. I think it's just too much of a market in a single product. I think people like to. They're slicing and dicing even these indexes right down into sectors and into other products. So it's kind of going the other way rather than going into the larger, more or broader type of index product. But again, you can create the Russell 3000 using the products that are out there if you want to invest in that. So that's what I would recommend. So
up on your whiteboard there in the office is not a big giant Russell 3000 options, and it's circled and highlighted. We're not seeing that coming next week, sir.
Not at this point, no. It's nice to get the request. More requests brings more product. As I said, CME and SIBO, they listen to their clients, and client demand drives product and business. So,
well, let us know, listeners, if you agree with Enlent. Do you want to see the massive beast that is the Russell 3000 listed? Again, you could do it yourself fairly easily, but it is on a theoretical level. Now that I'm thinking about it, I'm a little intrigued. So maybe I have Enlent to blame for planting the seed in the battle. I want to just hit sell all on the market, or buy all, which is effectively what you'd be doing, which would be interesting. All right, let's keep rolling on. Let's see. We got product requests all the time. You guys love the weird ones. So, hey, we'll get weird with you. That's what you want. We'll go there. Jack Trent wants to know, is there any interesting options action in Hogs with the big down move this week? Well, funny you should ask there, Mr. Trent. Looking here at the big movers and shakers, you guys can do this yourselves. If you go on over to TWIFO, you hit the quick reports, and then you hit the market scans and set the date range for 1 week, because it's this weekend, of course. You'll see the big movers that he's referring to. And if you did that, you would see that on the bottom half of the chart there, lean hogs are just wiping out everything else, at least in terms of aggressive downside moves. Over 11% this week, off 11.1%. The next closest looks like it's palladium with about 7.7%. Then we got corn with about 5%, looks like. KC wheat with about 5%. And then iron ore rounding out the bottom five there, about 4.5%. So lean hogs taking a beating this week. Let's go see. Let's do a little bit of hashtag hog love. We haven't done that in a while here on the show. Not a huge options product, but this week doing pretty decent paper. Dare I say, silver level paper here, which is a lot for the hogs. Let's see, coming into showtime here, we're at about a 77 handle. That's off about almost 10 handles, or like we just said, 11.3%. So rough week here for the Hogs. 77 is where our at the money strike is right around now. Again, if you're not familiar with Hogs and how they work, a lot of you aren't. This is not my go-to product either. But it is fascinating to explore it a bit. The vol, as you might imagine this week, up and up firmly, up strong, up multiple points across all of the term structure. Even if you go out all the way out to the middle latter half of next year, you're still up almost a point on the vol. So it's pretty aggressive, as you probably would expect, given the massive downside move we're seeing out here. Let's look really quickly. About almost half, for about 42% of the paper, was in this October contract, which has a little bit of time to run. So that's kind of nice. Again, you don't have the slew of options, pun intended, in Hogs that you do in some of the other products. Not a lot of months, not a lot of strikes. So it's not going to be a ton of choices out there, which means the paper is going to aggregate a little bit more as well. So let's see what was going on out here in this October contract. We're at the 77 strike right now. It was the 70 puts that lit it up. Not exactly surprising. Probably some downside concern. Let's see what was going on out there. They're trading 2,800, almost 2,900 times. That's huge for the Hogs. Listen, that's the equivalent of doing maybe hundreds of thousands on a strike in like the Russell or something. That's a lot of paper. So about nearly 3,000 of these 70 puts going up. The lion's share, almost exactly half, 1,441 going up on Wednesday. 700 today. Of that, slightly closing actually. You don't know today's paper, obviously. But Wednesday's paper was slightly closing, so maybe a lot of back and forth on that 70 strike, as maybe we threatened it, then came away from it a little bit again. But either way, it's that's where the action was quite a bit there. And then number two, right behind it, were actually now in the money puts going out in about a little less than 2 weeks. These are the AUG contracts, the 80 puts, AUG 80s, doing about almost 2,800, 2,784, so almost just exactly about 100 contracts less. And they pretty much went up the lion's share on Tuesday, 980 on Tuesday. Pretty active all week, actually. 800 and change on Monday, 500 something yesterday, 400 some odd today. So as we broke through that 80 strike, clearly a lot of action there. Slightly closing there as well. So maybe people deciding, hey, let's get the heck out of Dodge here now that we're through the 80 strike into the 70s. Maybe we'll look to a little bit greener, farther out of the money pastures here. So yeah, number two, hot and heavy, are the 80 puts here in August. Hot on the heels, very close to the number one spot here. Let's look really quickly here at the skew, Hog skew. That sounds like a fun thing to say. And it is. And it's also a fun thing to explore. Let's see. The lion's share of the action came in that October contract. So let's look and see what was lighting it up. And yeah, go figure. Puts getting a lot of love out here. They were about 1.6% rich to the at the money last week. This week, they're over 4%, 4.1%. So we're falling through. We're breaking through strikes, breaking through 80. We're maybe starting to threaten 75, maybe even 70. So puts getting some love there, and maybe not surprising. Calls, interestingly enough, completely unched. They were a little bit of a mild smile looks like going on here in Hogs. They were about 0.5% rich to at the money. They're pretty much exactly the same this week. So modest bid to the calls, a huge bid, growing bid to the puts out here, which is fascinating. Sean, I love the listener questions like this because they give us a chance to explore these esoteric products we don't get a chance to talk about. I know you guys at Russell, no plans for any Hog indexes anytime soon come out of Russell, are they, sir?
There's not.
Or maybe you're working on some weirder stuff that I know about over there. I don't know. I can't speak for you, sir.
We're always looking at new indexes and new products. We have a fantastic product development team at FTSE Russell. Again, when it comes to derivatives, though, these products come through the CME pipeline. We get asked for all types of indexes, but it takes a lot to get that to evolve to a derivatives contract to be traded on our partner exchanges. So we do enjoy, and we are very good at creating and calculating indexes. So anybody out there that's in the business or has ideas about indexes that they'd like to work with us, we're happy to talk to them. So
I'm guessing we're going to have a better chance of seeing the Russell 3000 before we see any sort of Hog-related index coming out of the Russell product. But you never know. Crazier things have happened. Speaking of Russell, I think this guy's written in before. He might be writing in with the same question again. Let's see, Dorn 2. He wants to know again, are there any updates on the premium harvesting strategies in the Russell 2000? I'm pretty sure, Sean, he's referring to those overwrite indexes we were talking when Rick was on. I believe they're pretty much those. That's what he's referring to. I think those are listed over there. I think those are SIBO ones, are they not?
Those are SIBO indexes, right? Yeah. And again, to actually, you could actually invest in those indexes themselves via some listed product, or you could create them yourself with the options that actually trade. So you've got plenty of options there, and Richard.Rosenthal at cboe.com will help you with that. He's fantastic. So that's his contact info.
As I recall, they're pretty much selling an at-the-money call and selling a 1 month at-the-money put, that sort of thing, right? And nothing more esoteric than that, right?
It's not that complicated. Yeah, that's basically the type of trades that they have.
So, yeah, if you want that replicated for you, you can go look at those indexes. They will, I forget the tickers off the top of my head. I know BXM is the S&P one, probably something similar for the Russell. I'm sure Sean will have it momentarily. But in general, if you want that, you can replicate it yourself that very easily. If you want to just sell a 1 month at-the-money call or a 1 month at-the-money put. Surprisingly, there is a little more performance differences in those two than you would think, given that they are effectively doing the same thing. But a little bit of interesting stuff there over there. And check them out if you want to, or you can do it yourself. Do it in the weeklies. You can do it 2% out of the money if you like that flavor instead. So we highly recommend rolling your own here. But if you like it prefabbed for you over there, that's the place to go. In terms of updates, I think there were some studies on those a while back. So that's what you're referring to. There haven't been any new studies that I've seen, but we'll keep an eye out for them for you there, Mr. Dorn. Number 2. Fens. Fens is agreeing with us. I like Fens. Fens says, I'm with you guys. That join market functionality is really kind of scary. What happened to price discovery? You weren't on the show last week, Sean. We had Adam, who's a market maker, primarily in crude, but in a bunch of stuff over there on CME. And he was talking about how there's this, you can effectively, he was talking, I think he was using it with Eurodollars was the description he was giving. But I think it applies to most of the products out there. If there's a market out there, you can come out and pretty much just hit join. And you are now effectively saying with, like you used to over in the crowd. And that was a little terrifying to me. I think Nick was a little taken aback by that too, that they have that functionality actually baked in. And I think Fens is kind of concurring with that. He's saying whatever happened to the role that the market makers do of actually, running your own vols, running your own models, determining what you think a fair value is, and then making your markets around that. And if you're where everybody else is, fine. If you're somewhere else, maybe you're not there and you're widening it out a little bit. That's the old role. Maybe this is reflective of the new era we find ourselves in, Sean, where a little bit of maybe of groupthink running the day, which is probably a little bit scary. I don't know if you're familiar with this, Sean, but is that unsettling to you like it was to Nick and I last week, and apparently to Fens as well? Yeah, definitely. I mean, you were an old school market maker, so this is something you're kind of familiar with. That's not something that it wasn't certainly institutionalized. You could say, hey, I'm with there, and you could do that, but it required a little bit of activity. You couldn't just hit a button and say, I am wherever the market is. So yeah, Fens, I think we're with you. That's scary stuff. And yeah, hopefully, I mean, it's also a reflection of the times. The liquidity providers, that's a difficult business to be in these days. And sometimes you can't devote the resources the way you used to doing these kinds of things. You kind of have to be where the market is and just kind of trading around that. So maybe a little bit of a sign of the times there as well. We'll wrap it up with this one here from Clamagny. Let's go with Clemaine. Or maybe C. Lamagna. French fellow. Either way, they're asking, thank you for talking futures options every week. Well, you're welcome, C. Lamagna. I wish more people followed your lead. Well, we're with you there too. More people talking futures options, the better. They go on to write, I have a question about the volatility skew of crude oil. I heard your recent episodes where you mentioned there wasn't much interest in an upside movement. Why do you think WTI call skew has remained relatively weak despite the big move down in crude oil futures? Well, we talked about a little bit of a firmness coming in this week. Hopefully, C. Lamont, you listened to last week's show with Adam, because we really did a deep dive into that on last week's show. Some of the origins and reasons behind what's kind of keeping things weak. The big picture, global demand with it certainly getting worse today with the trade war. Global demand seems pretty weak for crude, and that seems to be spooking everything else. That's overriding the tensions in the Middle East. That's overriding some of these drawdowns we're seeing in stockpiles. It's overriding maybe temporary things like the hurricanes. All these things that you think would be bullish arguments are just getting completely overridden by this global macroeconomic demand function and the fact that people think it just isn't there. And if this trade war exacerbates like it sounds like it is today, maybe it won't be there again for the foreseeable future, and hence those calls are weak. And as Adam mentioned it, anytime there's a bid, everyone's taking those opportunities to just dump those calls as fast as they possibly can, because you don't get those opportunities very often. So at the end of the day, it seems like that is a macro demand-driven impact on the skew, and it's a little bit firmer this week. I don't make it sound like they're bid up to high heaven, because they're not. They're firmer, which is something. They didn't get annihilated this week. I guess that's something. But still, it is an interesting story. We talked about it a couple of weeks ago when Russell was on as well. It's an evolving story, one to stay tuned to. And it's interesting because until that skew really markedly shifts and we start seeing really increasing demand for those calls, it's going to be hard to argue that there's a lot of demand for upside in WTI going forward. So the skew there, long-term indicators, I think someone asked last week, can I use skew as an indicator to trade intraday? No, it's not really for that. It's more for looking at what more longer-term outlook is on some of these products. And until we see these calls start getting bid up, I don't think we're going to see a massive longer-term upside. We can see some blips. Obviously, those can happen. They have happened. But sustained long-term upside, not until we see that crude skew start to get a little bit more bid to the upside. All right. Unfortunately, listeners, that music means we've come to the end of another epic sojourn to the world of futures options. What did we hit on today? We did rates cuts and all that, how that impacted the equities and the madness going on today as the worm continues to turn. Let's see right now. Looks like it's still off, but not quite off 1% in all the equities. Off about, the Dow's off nearly 1%, but the S&P and the Nasdaq mitigating that, off about 0.75%, about 0.2%, respectively. There we talked a lot. Pretty much anything you ever wanted to know about Russell Recon, we hit on it today. It's as you can tell, a pretty market impactful event. We talked some crude, talked some silver, even some lean hog. We got into some weird products today, which we like doing. Send in your requests for esoteric products. We love to hear them. We love to talk about them here on the show. So hit us up. We love talking crude and gold and equities all the time too, but mixing it up is always fun. And before we go, Mr. Sean, you kind of mentioned that cool whiteboard you guys have over there in Russell Land. Can you give us a little peek, a little hint of what you guys have come down the pike? And if folks want to learn more about what you and your team are up to, where should they go? What should they do, sir?
Smith at FTSERussell.com is the main email address for you if you want to talk to me directly. Hog indexes. I'm holding the chalk in my hand right now. I'm just going to write it up here. What the heck? Let's see what we get.
Russell
back.
Hog Index. I'm down for that.
I'm thinking an index of hogs. Like, what are the different index components? Large, medium, small? I mean...
Yeah, tasty, less tasty. A lot of ways you can go, with...
Or you can go the components. You could go ham, pork belly.
Yes, pork chop, pork belly, ham.
Pork chop.
Bacon.
Ribs.
There is that. CME puts out that bacon index now. You may have some competition with CME on the bacon index front because they have that. But if you go around that, I think there's some good stuff to be explored. I think there's some gold here, sir. You may be onto something here. I'm liking the Russell expanding into the hog. You see, you come on the show, these are the kind of gold you get, sir.
I do want to mention that if anybody would like some information about the history of the Russell 1 and Russell 2000 indexes and the combined Russell 3000, there's on the FTSERussell.com website, there's a 40 years look at the history of the indexes themselves and how they were created and where they are today, and lots of information. Like Recon used to be more than once a year. I don't know if anybody knew that, but it used to be several times a year, and it's evolved to once a year. So there's all kinds of cool facts to learn about the indexes themselves. There's some history about some famous stocks that have graduated from the Russell 2000 to the 1 and beyond. There's a lot of information. But if anybody would like to see that 40-year look, feel free to email me at smith@FTSERussell.com. I'd be happy to send it to you.
There you go. So I forget the listener's name there who wanted 3,000. Maybe they should hit you up and check that out. It was NLent. NLent should hit you guys up. At the very least, you should be following at FTSE Russell over there on the old Twitter machine, because a lot of good data coming out there as well when we're not on the show. Intra-show. I know it's hard to imagine things happen when we're not on the show, but they do. If you want to check them out, at FTSE Russell _ND on Twitter and or FTSERussell.com is the place to go. Or hit Sean up directly. He's nice enough to give you his email, his personal email. So take him up on that offer before he regrets it and changes it. And of course, buddy Nick here, traveling hither and yon today, couldn't be here at bandtix.com is the place to go, or quickstrike.net. Kick the tires and light the fires on those tools. You can try them for yourselves for free. CMEgroup.com/TWIFO. While you're there at CME, you can find lots of good stuff, the research, the data, our show, of course, all sorts of good stuff. Head on over there. We had Blue on recently. Him and Eric combined, their research will keep you busy for days if you go over there. So head on over there, kick the tires and light the fires. Try out the TWIFO, then hit up Nick and tell him you want to do more. And on behalf of Sean and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such awesome and different and varied questions. Keep them coming. We love you all. And we'll see you back here tomorrow for Volatility Views, and we'll see you back here next week for another edition of This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bandtix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.